This is the Friday, March 22nd, 2019 of the Market Plus segment. Joining us now is Sue Martin. Sue, welcome back.
Thank you, Delaney.
Sue, I had to do it. I'm sorry. I cut you off right there at the end. We were talking April lean hogs. Answer it for us now. Where are they headed?
Well, I think it was a very good teaser. But April hogs, I think, will take out last year's high of 84.07. The market on Friday had a lot of liquidation. We had like $6, $7 ranges between the highs and lows on the various contracts. And I think it was such a big week up, $20 plus moves, maybe 25, 26, but big moves. And I think people wanted to take some cash and go home for the weekend. And so we've seen that. I think there was a lot of option liquidation because even while futures were higher, we noticed calls were lower. And so I think that showed signs there was liquidation in the options as well.
Are you nervous that we're going to be entering territories of being overbought?
Well, technically the market looks overbought, but it may not be that the market's overbought for the fundamentals that are reigning.
Just not taking those into account.
Right. You know, if you look back at when we had the PED virus and we went to 130 in hog futures, the market had every 5 to 7 days, it had a lower day, and that's all it had. And then it turned around and just took right off and ran some more. So we did not take out the low of Thursday, and we still closed higher for the week and for the day. So I think coming here Monday, we're going to maybe see if we can weave around, but I don't think we're ready to drop back yet. And I think hog prices are still going to try to push stronger in April.
Okay, push higher in April. I think the producers at home are going to enjoy that one. Sue, let's talk here about the live cattle market and also the cattle on feed report, a bearish report overall. What is that signaling to you about the cattle complex?
Well, it was rather surprising. First off, on feed came in at 101%, and we expected it to be around 100%. And then, or on feed, I guess, was 100%, and that was about what we were thinking. And then the placements was the number that really stood out. There wasn't anybody expecting that number to come in over 100%. We thought around the average guess at 96%, and it came in at 102%. I don't know if I can accommodate that thought process. People in the industry say, hey, probably 10% less cattle on feed than a year ago. And you kept hearing the reasons that this was the reason for the feeder cattle market break. So it's hard to believe that we were placing more cattle than a year ago, but that's what it said, so you got to just go along with it. And then, of course, marketing, we thought marketing would come in at 102, and it came in at 100%. So, you know, the marketing number could have been bigger, except, to be honest, we weren't getting cattle moving because they were so lightweight, losing weight, not gaining. And so I can kind of see that number, but the placements, that one really jumped out. So it'll be a bearish attitude, but I don't think it'll live long.
Okay. And when we look at the live cattle markets in particular, are those also heading into overbought conditions?
They're getting there on the daily charts. My weekly, and I've been on before, the weekly charts of indicators that I use are still sitting flatlined at 99%. And they've done that since October 23rd, and I can never remember a time we've done this so long. But seasonally, fat cattle do tend to peak in March or April. In April 4th, it'll be a year since we struck a low last year. So it wouldn't shock me if we're making higher highs on April 4th. But
how much higher highs?
Well, I don't see anything going much over 134 on the April. But 130 sure is doable, and I think we even got to that maybe on Friday.
Yeah, I think we did.
But I will say this, for producers that have cattle coming in June, I would probably say, and even in through the summer, maybe get some hedges on, do the 125, 126 area on June cattle. On the August, you know, try to get up around the 124 level, 123 level on that. But I would be doing some hedging. But once we haven't even gotten into our grilling season yet. And look how stellar the demand was all winter for the beef product. It was huge. So I have a feeling that once we get a break, you know, look at the East Coast. They had another nor'easter this week. So you get that gone, and I think demand's just going to take off. Everybody's going to have spring fever.
Everybody's ready to get those grills started.
That's
I know
right.
I sure am. Sue, let's take a couple of social media questions here. I want to talk about the wheat markets first, because we talked a little bit about in the main show there with what's happening because of the flooding, but we also talked just briefly about exports. We've got a good question here from Evan in Shelley, Minnesota. He said, globally, we are one of the only countries left with a wheat supply, but yet we are hardly selling anything. Why is this?
Well, I think it's because, for example, Russia was the big competitor to us, especially. And they dug into their reserves, and we kept hearing talk that they'd had a poor crop and everything, but yet they kept coming up with wheat to sell.
Even though they kept teasing the market saying they were going to curb exports.
Exactly, and they never did. But I think they reached into their reserves to raise money. And they did kind of stymie the smaller crushers, or exporters, I should say, from exporting and let the bigger ones do it. So I think that's kind of kept them in the market longer than they normally would have been. Brazil's production is looking like it's going to be up 1 million metric tons more than what it was a year ago. So that'll give them a little more. Argentina's had a lot of wheat also that they've been exporting, and so they've been competing against us as well. Australia's been a non-event, and there'll be a non-event, I believe, this coming season. So I think we're about on the cusp of exports starting to pick up now.
Okay, within the next month, the next couple of months?
Oh, we should start seeing it here pretty soon, I think.
Okay.
Yeah.
That's a little bit of good news there.
Yeah.
Amongst other things. Some things that I think we need to address still that we didn't necessarily get to in the main show. I want to talk about prevent planting, because that's definitely a hot button issue right now as we look at all the flooding impacting and then snow cover on still a lot of the northern plains and Midwest. You mentioned this week, I think it was in reference to soybean prevent planting acres, that potentially folks would just want to take the preventive planting and not even put those acres in the ground. Explain to me the mindset behind that.
Well, there are farmers out there that have been losing so much, and they're probably maybe getting a little bit stressed or strapped with their banks. And if it takes trying to get themselves through this year into next year, and the weather doesn't accommodate them very well, and we know that certainly it looks like there's going to be a lot of those farmers this year, I think they'll opt to take the prevent plant and take the money from the government rather than try to wing it another year and just face what they can, getting crops in late. Unless there's something really positive coming out of the trade agreements, and it comes in time for them to be able to try to make that, that effort to get stuff in. But there's a lot of areas that are going to be just way too wet, and if we're cool and wet in April, that's not going to be very helpful drying things out. They may not have much choice to be able, and like I say, they're behind the 8 ball anyway to get fall field work done. So the producers that are on edge, I think, will probably opt to take prevent plant this year if that situation's presented to them.
And if that situation is presented, how many acres do you anticipate that we'll see?
It could be as much as 4 million acres. We could double what we did a year ago.
Okay. Will that be enough to change anything in the commodity markets?
It should, because when you look at corn, and if I'm right that China takes 7 million metric tons of corn, and say they take 3 million metric tons of ethanol, well, then you've got a situation where our carryout with our acres this year being, say everybody's talking around 90 and a half, 90, just shy of 91, but you take a yield of 176, trend line yield, and you could easily come in with a carryout under 1 billion bushels. So that should be very positive. And then you start looking at the psychological change of everything, and we have more hogs, more poultry. It looks, and cattle. Of course, we'll have some changes there as we get into next year, not this year. But that's all very positive for corn usage. And of course, once we start seeing ethanol becoming more profitable, these plants will be processing.
Okay. That's a great segue here, Sue, into some of those end users. We've got a question specifically related to end users and those folks being impacted by the floods. We've got Zach in Lawrence, Nebraska. He said, old crop corn, with the wet conditions, farmers can't get grains out of the bins or bags. End users such as feedlots, hog processors, ethanol plants, etc., are offering premiums right now. He said around $355 to $360 cash. Should we sell, or will spring rallies pass this price point?
I think the spring rally will pass that price point. It's the situation will be, the key to it will actually be what the weather in April is like. If it's wet and cold, they're going to have guys not able to really move the grain real well. I would say roads will start to firm up maybe a little bit. It just depends on how much rain we get. And if that occurs, those premiums will go even more so. And then once farmers get in the field, they're not thinking about hauling corn.
Yeah.
They're thinking about planting, and they'll be in there. And of course, with the big equipment, it doesn't take long.
If it comes to an issue of perhaps they have bins that are going to be damaged, or corn that's going to be moldy or damaged, then should they get out?
Okay. Yeah, they're going to have to do something with that. And, if the processor's willing to pay them without dockage, then I would say go do it, because there's a lot of corn that's probably in trouble,
Yeah.
I would say.
Absolutely. Sue, last thing here, I don't want to forget about it. The Great Grain Robbery, another thing from your newsletter this week. What is it?
Well, back in the 70s, we had, when President Nixon, who was not a favorite president at the time, won by a landslide, but wasn't favored and was impeached, he took the dollar off the gold standard. And so you had a currency play there. In the meantime, you had the USDA, who had been having bin sites where the government was storing corn and soybeans. And they ended up getting out of the grain business. I think Secretary of Agriculture might have been Earl Butz at the time. And so when this happened, Russia came in, prices were cheap. Russia came in, and with the dollar floating, of course, becoming the currency of the world, Russia came in and swept us out of all of our grain. And as we went down the road, it became, of course, then by 73, we also had a weather market, and we were tight supplied, and prices escalated for the first time. We had bean prices go over $12. And originally they had been maybe $2.40 or something like that. So they escalated, a parabolic move, sort of like what HOGS are doing. And you had low interest rates at the time. And if you look at what's going on now, part of the trade negotiations is currency. And President Trump wants our dollar to fall. He's trying to talk it down, but it's not listening very well yet. But if it falls, that helps open the door for exports. But in the meantime, China is in need of a lot of grain. I think China's warehouses are not as full as they'd like you to believe. I think that they need everything. And they've got armyworms already found in Yunnan province. There's other countries with armyworms as well. And so if that continues into their corn season, they're going to have a problem there. I think China's got an ambitious endeavor for ethanol blending. And I think that their wheat, they've had 2 auctions in the past week. They've only sold less than 1% at each auction of the wheat, which tells me it's either extremely high priced, which I doubt. I think it's poor quality.
Yeah.
And so I think China's very much in need of commodities. And this agreement with Trump on the trade agreements is setting us up for a huge, I just wonder if we're overselling our hand, to be honest. It's good for farmers as far as prices go, but we all know as prices go up, so does the cost of equipment and the inputs, and those don't ever seem to go down.
No.
So it's interest rates cheap right now. There's so many similarities that I have a feeling we're going to look at another grain robbery when we get down the road. Plus, it's inflationary as well. And when we look back down the road, we're going to say, wow, this one outdid Russia.
All right. Sue Martin, thank you so much.
Thank you.
Join us again next week when we assemble a panel of analysts to break down the latest government report on planting intentions. Join Naomi Bloom, Dawn Rose, Ted Seifert, and Darren Newsom around the market-to-market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.